All right. Break time's over. Time to get back to work. Tuesday evening, February the 2nd, 2021. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, tuning in for the first time tonight, it's great to have you with us because my job tonight is to help us find the best trade setups for tomorrow, Hump Day, Wednesday's trading session. I got a great video in store for you guys tonight. Charts are all prepped up in the background. Got the Eminis, we got the oil, and we got that yellow metal, the gold futures on our radar for tomorrow. Where do I begin? Lots of big moves in today's trading session. Got some ranges, and those ranges are most likely going to be the biggest clue as we go into tomorrow's trading session. We're thinking breakouts. We're thinking failures, maybe some reversals tomorrow. Got a lot to cover here tonight on this video to make sure you and I both are ready for the best trades for Wednesday's trading session. Before we jump in, though, and get our hands dirty on these charts tonight, though, I just want to make sure to remind you to subscribe to our YouTube channel. You know, we publish this video newsletter every evening right around 7 o'clock Eastern time with our best trade ideas for the following day. So make sure you subscribe, hit that little bell icon so as get notified when I publish tomorrow night's newsletter. And how about questions? If you have any questions for me, I'd love to answer those questions. Drop those questions for me in the comment section below. I'll get them answered as soon as possible. And you know how much I appreciate you guys tuning in every evening. I really appreciate you carving out an hour with me every evening during the week. If you enjoyed this video as much as I enjoy making it for you guys every evening, hit that like button, hit that thumbs up for me here on this video newsletter. So again, one more time, don't forget to subscribe. That way you're ready for tomorrow night's newsletter. Drop those questions in the comments section and thumbs up if you guys enjoy the video content here every evening on this newsletter. But enough of the intro, huh? Let's get this thing going. We got to get ready for tomorrow. Hump Day is right around the corner. As you can see here, the charts are all ready. The S&P, the oil, and the gold. There's going to be a lot of similarities on these charts tonight, but there's going to be some key differences. You know, for example, the S&P here on the left-hand side, S&P was pretty much a runaway market today that ended inside of a trading range. Now, of course, whenever we have a bull market in a trading range, buyers are looking to buy above, sellers are looking to sell above, and so we're focused on, failure patterns to buy below, breakout patterns and reversal patterns to sell above these highs. I'll tell you, the buyers have a tricky job in front of them on the S&P because we get a lot of major resistance here overhead. So I'm open-minded for a breakout going higher here, but we really got to be careful threading the needle up there. There's not much space before we get back to those all-time highs. I would love to look for some shorts on the S&P, but as we saw today, right, the buyers were very, very strong today. Not to worry, though. I got a couple reversal patterns on my radar for tomorrow. We'll talk about how to buy it. We'll talk about how to sell it here on the S&P, so make sure you stay tuned for tonight's video. Oil, of course. Oil getting a bull move higher into a range as well. Bull market into a trading range. Now, I'll tell you, if there's one market right now that is ripe for a breakout higher, it is the oil. There is a ton of open space here on the oil going higher. So I'm looking for a possible breakout setup on the oil. I don't want to buy the highs, though, right now because we're at major tops up here around 55. Could we possibly sneak in a failure off? Is it possible for a reversal? Absolutely. A reversal off that high would be great. And we're looking for some buy setups down below that range tomorrow. So will we get the breakout? Will we see a reversal? I get some really great pattern setups for the oil traders out there, so make sure you stay tuned for that tonight. And of course, pretty much the opposite direction, but same basic idea. Gold was a big bear move down into a trading range. I've got a lot of levels overhead right now acting as resistance. I would love to short a pop here on the gold tomorrow, or I've been more than happy to trade a breakdown, right? Breakdown would be great too. Got some key levels waiting just above 1800 on the gold here. So we'll see. They've been talking about stimulus today, so we'll see what gold happens. For the sell side, I wouldn't be opposed to a reversal, but again, I'd like to be selling pops here on the gold. If we do get that reversal, I'll make sure we know how to trade it if these buyers can claw their way out of this big bear move down. So bearish trading range on the gold, bullish trading ranges on the Emini and the crude oil. Got a bunch of great patterns. So you're going to thread the needle on the S&P, looking for a possible breakout on the crude oil, and maybe a reversal on the gold. We'll take a deeper dive into this here in just a second. First, though, let's make sure we take a look at the calendar for tomorrow, because as I've been mentioning to you guys, we're in peak week, as they call it. Lots of earnings reports coming out before the open, after the close, which is what's causing an uptick in volatility, right? We've talked about this quite a bit already this week. Earnings season, the month following the end of each quarter. And so we've got a lot of the big companies. Today we heard from Amazon and Alphabet and Pfizer and ExxonMobil and UPS and Alibaba. We heard a ton of earnings. I'll tell you, a lot of really, really good earnings came out, and you can see the market responding to it. I would say a very healthy reaction from the market today. Amazon beating earnings, Alphabet, Google beating earnings, Pfizer beating earnings. ExxonMobil having its first loss in 40 years. Totally understandable, right? UPS beating earnings, everything beating earnings, and no surprising to see the markets rally, right? What we would be worried about is if we saw all these earnings beats and the market was crumbling lower, right? That would be a big concerning factor. So earnings do make things look pretty rosy. We heard from the Senate here in the U.S. talking about, trying to put the stimulus package together here this week. We'll see how that goes. And so there's been a lot of good news, right? Whether or not you consider stimulus to be good news, but a lot of good news, right? It does appear the COVID numbers are starting to stabilize and come down around the world. Thank goodness, right? Hopefully everyone out there is doing their best to stay healthy. But a lot of kind of a rosy picture in the markets today, and we definitely felt it. Oil was up, gold down, S&P up, right? So that makes sense, right? What happened in the news directly relates to what happened in the market. So very healthy day out there regarding news goes. As we look at tomorrow, once we open up, we just heard from Amazon, Alphabet, Alibaba. We just heard from all these big companies into the close. So there might be a quite a busy overnight session here tonight as we go into Wednesday's trading session. So if you're in Asia, if you're in London, and of course going to the U.S. session tomorrow, be aware of that. Lots of news that came out just after the close today. So as the markets open back up in Asia in about half an hour, 45 minutes, be aware of that on our radar. Looking at tomorrow's news, though, you'll notice we've got quite a bit of news. We got the ADP employment report at 8:15. We got this Treasury refunding announcement. Not sure what the hell that is. But the big news tomorrow is definitely going to be the PMI composite flash and the ISM services index. If you could only be at your desk for an hour tomorrow, I would definitely make sure it is that 9:45 to 10:45 block of time tomorrow. The ADP employment report, it always sounds like a big deal, but this ADP employment report is an appetizer to later on in the week, that employment number on Friday morning. So I wouldn't expect, we might see some reaction to it, but I wouldn't expect too much out of the ADP employment. The Treasury refunding, I wouldn't waste your time worried about that. The big meat and potatoes news tomorrow is that PMI composite final and that ISM services index before we have the weekly inventory report at 10:30 Eastern time. So I will definitely be at my desk tomorrow. Obviously, I'll be there with you guys in the trade room tomorrow at 8 o'clock Eastern time. But again, if you could only be at your desk for an hour tomorrow, 9:45 to 10:45 will probably be the big news of the session. Will we hear more about stimulus? Will we hear more about these decreasing COVID numbers? Will there be any unexpected news tomorrow, right? There's always potential for that during peak week, right? Earnings season. And so we'll definitely be keeping our eyes and ears open tomorrow morning in our trade room. So make sure you're there, right there with us. We open up at 8 o'clock Eastern time tomorrow morning. Now you know the news for tomorrow. Again, if you're trading the overnight, if you're in Asia, if you're in London, be aware there could be a pretty busy overnight session for you here, since we just heard from some of the biggest names in the world, right, late Tuesday afternoon. Back to our charts here, though. Got the E-mini. We got the oil. And we got the gold here. Lots of strong moves today. Lots of ranges to finish off the session. Let's start first with the S&P 500. As you can see here, the buyers, right? Today was pretty much a runaway day on the E-mini. I'll tell you, last night, this thing looked like it was ready to tumble, right? It certainly did, but they definitely proved me wrong, right? With that 1, 2, 3 breakout, mark that high, right? Mark that low, and by that first test is the best test, right? As we mentioned last night on the newsletter. I was talking to a bunch of us today in the trade room today. When you look at this thing in hindsight, it looks like a complete runaway market. But you could definitely tell that the buyers obviously had control all day today. But you'll notice what happened, right? The market kept on. It honestly felt like you were driving a sports car in rush hour traffic today. It kind of spiked up and went sideways, and spiked up and went sideways, and ran up and went sideways, spiked up, right, and then finished off going sideways. It was almost like if the market could talk. It was almost like it was like, are we doing this? Are we really doing this? Are we going back to the? That's what it felt like as you were sitting in the trade room this morning. Obviously, very bullish. Our job was to buy pullbacks today, right, on the S&P, but not much pulled back, right? I mean, this is kind of the first deep pullback we saw all day. So kind of an interesting day today. Again, in hindsight, into the close, it was obviously kind of a runaway day today. But if you were trading it in real time, it was kind of like driving a sports car that was kind of revving the engine first and second gear, revving it, stalling out, and kept on just, grinding higher here. And again, a lot of earnings coming out, good COVID numbers, and of course, stimulus. It seems like at this point, these buyers are trying to make a run, right, for those all-time highs again, right? They've got that range from January. Remember this range, that 38.50 range? I know. It's way back there, right, from towards the end of January. So we know we have that acting as a magnet, but how we finish the day today, it's pretty much just a runaway bull market into a trading range. And so whenever I see a market that is a strong bull market into a trading range like this, what you want to think of is there are really two basic strategies. One, you want to find support levels below the range. Okay, find a support level below the range, and then use what I call a failure setup, right? As it goes lower, wait for the bears to try to get short going lower, and just buy into those stop losses. That's one way to trade a bull market into a narrow range like this. Another way to trade it is a breakout, right? Which we like to use these 1, 2, 3 breakout patterns, right? We see a strong jump up, hold the pullback, right? You don't want to trade the pullback, wait and see if they can take it. And then of course we can mark the high, mark the low, and we can buy the low of that channel. So these are, kind of your basic idea of how to trade a bull market into a trading range. Our big challenge for tomorrow is going to be there's a lot of resistance up here overhead. So trying to buy into that resistance is where I think we're going to have a lot of the trouble for tomorrow. So knowing that is the case, we're going to be looking for traps most likely. So as we go higher, we'll have to look for traps, right, to get in below prior swings. It's going to be a bit of a thread the needle, like I said in the introduction, right? As we go above this range, a lot of bullishness, and for good reason. We had that rosy view of the markets today. So it's easy to see why this market might keep going higher here, but trying to find our way in as the market goes higher is probably going to be a little bit of a challenge tomorrow. So we'll talk about that here in a second. The easy money, of course, would be that failure below that low. Now, it looks like they've already got that failure, right? They go down, they pull back, the bears are trying. So it looks like they're trying to buy that failure right now to go back up and retest the high. I'll tell you though, it's a difficult pill to swallow because of that falling resistance trend line that we can see here on this chart. So not the easiest of markets for tomorrow. We know exactly what direction looks like. That's pretty easy. The big question I have is how do we safely trade this? So for example, if the market goes higher here, We got that range overhead. We've got that, right? We've got that big area of resistance. If the market goes higher, the top of this range acts as major resistance, obviously. So as we go higher, if I can get a strong move up, if I can get a pullback to the moving average, and if we can jump off the moving average, I have to get into that trade before we retest these highs, right? We call these 1, 2, 3 breakouts, right? And then 1, 2, 3 breakouts into a hidden channel pullback. Okay, be aware that, again, it's tight. There's not a lot of space up there. So if we see this thing go really jumping up, that's where I've got to start looking for traps, right? So 1, 2, 3 breakout, or what we call a 2 try breakout, and I'll want to see a trap entry, right, to get into it. So just be aware of those two setups as we go higher, right? So again, 1, 2, 3 breakout pattern, 1, 2, 3, mark that high, mark that low. We're buying off, right? We're buying off that low with a pullback pattern, a seller failure pattern, could be a 2 try trap pattern, right? As you kind of dig in that on a faster time frame. But again, if the market really spikes up, I'm not going to want to buy that pullback into these highs up here. I'll have to wait for that trap to get in below those highs, right? So again, very tight space up overhead. I'll be honest, what would be a whole lot easier, to be honest with you, is if the market jumped up, took out these highs, and then we get a reversal. Now, my favorite reversal pattern in a bull market like this is going to be a crown reversal. So buyers will try once, lower low, buyers will try twice. I would love that reversal setup to get short off of these highs. It has to take out those highs though, right? Buyers have to complete their mission, take out a retest that high, then give me 1 try to buy it back up, lower low, give me 2 tries to buy it back up, and if I can get that trap high, man, what a great short setup, right, off of that high. So as the market goes higher, it's either going to be one of those, 2 try trap breakout patterns, or I'm looking for the reversal because there's not a lot of space as we go higher. And keep in mind, guys, I talk all about these reversal patterns in our free trading course. Reversals are tricky because you only want to use reversals at certain turning points in the market, like a measured move, right? Like the underbelly of a trading range. What I'll do is I'll put a little pop-up there for you in the upper right-hand corner if you want to learn my favorite reversal patterns, also my favorite breakout patterns, my favorite trap setups. I cover all my favorite entry setups along with all the rules of those setups in our free trading course. That little button that popped up there, grab that little button, get registered for our free trading course. You'll learn my favorite trading strategy, how I trade every morning in our trade room with our clients, and of course I'll send you hundreds of examples of how we apply these entry setups to our favorite futures markets. So make sure you grab that free course, and that way the next time I talk about a 1, 2, 3 breakout or a 2 try breakout or a crown reversal pattern, you'll know exactly what I'm talking about. Now, what if we go sideways up here, right? Because one definite thing is that we may end up just getting stuck here, right, and going sideways. If we do end up going sideways here, or if we end up going sideways, you know what I mean? We may go up and go sideways up here. If we go sideways here, we know exactly where we want to get in now, right? They come down. If we end up going sideways here now your best entry is right off of that low. And what you're going to do is mark that low as support, right? We'll mark that low as support. I want to wait for the breakdown, get that moving average coming over, get some sellers to try to commit on the short, and then just buy right into their stop losses. So if the market goes sideways, remember, like I mentioned in the beginning, if we go sideways, the market's bullish, I'm looking for support levels below the range, and I'm combining my failure pattern to trigger the entry long. You're waiting for the pullback, bears try to get short, and we're just simply buying into those stop losses for that rally going higher, right? There may also be a trend line coming down here as well, right? So we'll take a look at that tomorrow. Great spot, though, if we go sideways to find an entry, all right? So we'll keep an eye on that. And again, if we jump up and go sideways up here, at that point now you've got support down here now, right? Now you've got your support levels down here now. Same idea, right? Find your support levels below. Wait for the pullback. Don't try to pick the bottom, right? Let those bears come in, try to get short, and we'll buy into those stop losses. So if it keeps, if it runs up and goes sideways, we find support levels below the range, and we combine those support levels with what we call seller failure patterns. And again, you'll learn all the details of the seller failure pattern in that free trading class linked up in the upper right-hand corner. Now, as the market goes, or if the market goes lower, right, how do I trade it as the market goes lower? Well, one easy way to do it is if this thing really jumps and runs lower here, right? If it really takes off with a 1, 2, 3 reversal, I'm going to mark up that low. I'm going to mark up that high. And then remember, there's a range down here, right? This range, specifically that 3780 area, is a big magnet for the sellers. There are a couple setups we want to think about if we get that 1, 2, 3 reversal. The first one, of course, is getting short on the first test off the high of this channel, right? And you'll usually see what's called a failure pattern, a buyer failure pattern, get above the moving average. Buyers that buy the pullback, they're buying right into the top of that new channel, and we can sell into their stop losses right when they fail, then into a pullback set up off the EMA as we roll lower. Remember too, after that next leg lower, now you want to start looking for traps. Okay, so 3 different entry setups if the market rolls over here for us. Again, it'll be a failure pattern. It'll be a pullback pattern coming off the top of that channel. And then kind of the last little drop there is that trap pattern, because obviously traps are great when you're towards the end of a move. So keep your eyes on that, right, if we get that run lower. If the market, for example, takes off to the downside, right, if it just completely tumbles, I also like to look for those 2 traps, right? Strong move down, shallow pullback, lower low in price, right? And that trap above the high. I can combine that, as you can imagine, with that low off of that high and trigger that setup off the high of a channel. All right, guys? The hard part is going to be if the market comes lower but doesn't really collapse, right? The hard part's going to be if the market comes lower and kind of starts to sit here for a while, right? Now, if that happens, this is where you start looking for a crown reversal. You draw that low, you draw that high, and you start looking for that up and back from there. So if the market, if the market kind of bleeds lower here, you know what I mean? It doesn't collapse like a reversal would be, but it kind of bleeds lower there. I don't want to sell down here. I want to sell at resistance. I'll mark that low. I'll mark up at that high, and I'll try to pick the top of that channel there. Buyers trying once, buyers trying twice. I won't necessarily need a trap. A trap will be even better, right? I mean, a trap would be even better if I get a trap off the high. But most importantly, though, I can look for a short off of that channel. And then for some crazy reason, right? For some crazy reason, if it comes down and goes right back up again, right? Goes right back up again. At that point now, I can use this trend line. This is probably the most difficult setup of the day, right? To trap and buy that breakout pullback, right? Getting back above that trend line. It's not going to be the easiest of entries, but that will be kind of the thread the needle as we go. Now, I'm sure there are a couple scenarios I'm missing here tonight, but in the essence of keeping this video relatively short here, I will save the rest of this for tomorrow's trading session in the trade room, 8 o'clock Eastern time. We get together every morning in our SOT trade room, so make sure you come out and join us there. S&P looking pretty good. The hardest part is going to be buying this thing as it goes higher because of all the overhead resistance. How about some crude oil? Strong bull run today on the oil, as you can see. Strong run up, right? 2 legs up into that measured move. It's pretty much just a strong bull run up to that $55 a barrel area. And then it goes into this kind of strange range. The range is actually right here from 54.89, 54.72. But you can definitely see there's the sign of another range there. So tomorrow we may end up kind of filling in this area here and create one big mega range, for tomorrow. So just kind of be aware of that. That's definitely something that you can kind of see shaping up here. But the big idea for tomorrow is we're bullish into a trading range. We're right on top of a big round number. And these big round numbers are probably going to continue to be magnets here. $55 a barrel, $50 a barrel below us. And then really, if you look at like a daily or a weekly chart, we really don't have a lot more until, where is it? It's all the way up. I mean, there's a ton of, it's basically 60. Right? It's basically Mars, right, up there. It's so high up. So a lot of space overhead because, we had that peak and then we had that big gap, right? When COVID started, right? So we're now clearing above that gap now. Now we have all of this open space overhead to kind of get ourselves back on track. Whether that's going to happen tomorrow or not, we shall see. But we have a ton of open space above us, which the S&P cannot say it has. So we're bullish. We're in a trading range. The buyers want to buy breakouts, right? As we go higher, to kind of keep this as short as possible, I'm repeating myself, right? As we go higher here, buyers can take out those highs. They can hold the pullback, jump off the moving average. I'm not going to buy that first pullback for the same reason why I wouldn't buy that pullback or that pullback, not at the end of a measured move. But if they can hold the pullback, grab that high, grab that low, first test is the best test, right? We call that a 1, 2, 3 breakout. 1, 2, 3 breakout. The key though is you want to see the buyers hold that pullback and jump off the moving average, right? That's the key, and then you can really sink your teeth into that first pullback to low of that channel. Another breakout pattern, one of my favorites, is a 2-try breakout. We have a big, strong move higher. That's usually the giveaway for a 2-try breakout. Once we see that big, strong push, a shallow pullback, barely touches the moving average, then a higher high in price. That means there is everybody waiting for whatever pullback we get. A trap low will always be one of my favorites there. I love to combine these off the low of channels as well. Be looking for that tomorrow as we go higher. And again, as far as a target goes, right? As far as a target goes overhead, there is a ton of open space there. So really anyone's, your guess is good as mine as far as how far this thing could go here if this market does break out going higher. So 2 breakout patterns going higher. Now, could I sell these highs? Absolutely. We have to assume that big round number and the way they're kind of rejecting that highs is an exhaustion sign. If we do run higher here, I would love to get a crown reversal. Buyers try once, buyers try twice, get that trap high, right? So crown reversal to sell back down. That would be a very good opportunity for us to get short. We'll see if we get it, right? So as you can see, if the market holds that pullback, that becomes a 1, 2, 3 breakout into that new hidden channel. If they don't hold the pullback, give them one more shot and then hit them right on that, again, on that crown reversal pattern here. And remember, you want those lower lows in price, right? Lower lows in price. For example, we go up, buyers try once, we don't actually get that lower low until down here, right? Which you could try to call that the crown reversal, but it's a little bit late in this price action for that. I'd like to see us take out these highs. Buyers try once, buyers try twice, right? Get that trap high and hit them right where it hurts there. Another option would be we go up, the buyers try once, and then we start to kind of fade off, right? Back to those lows. Like I said earlier, you can draw a trend line off that low, trend line off that highs. I purposely draw it off the big high, and then that's where you start to get that short, right? That's where you get buyers try once, buyers try twice. Another great shot for us to sell off of the high. And again, as I mentioned before, all of these reversal patterns, I cover them in a lot more detail in that free trading course linked up there in the upper right-hand corner. So if you're serious about making the most of our time together every evening on this newsletter, or if you're going to be joining us soon in the trade room, or maybe you're just getting started and you're trying to get your confidence and consistency going in your trading results right now, that free course will definitely be a good advantage for you. Now, as the market rolls lower, if it rolls lower, okay, this is where things get interesting here for the buyers and the sellers, because as you can see, we've got this market rolling back over now. If it does make a nosedive, right, if it does roll lower, this is a prime spot for sellers, right? We can easily look for this to roll over into a 1, 2, 3, right? Roll over into a 1, 2, 3, mark that low, mark that high. Again, think about a buyer failure into seller pullback combination, okay, off of that high. Again, buyers get above the moving average. They try to buy the pullback. They fail. We get back below the moving average. Bears take advantage of momentum and they sell off the pullback, right, off the EMA. So a 1, 2, 3 reversal, or maybe it simply tumbles, right, with a very strong move down, right, strong move down, shallow pullback to the moving average, lower low in price. Trap, 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 right? Look for that trap. One of my favorite setups when the market really gets going, right, on a real strong tear like that. Always looking for traps in that situation. And again, I will always be looking to combine those levels, right, with some sort of additional resistance, like a trend line, like a hidden channel line, right, as we go. Now, what if we get down, take out this pendulum swing, and then start to make our way higher? How do I buy that? Because aren't I supposed to buy underneath a range? You can, but you've got to be careful. This trend line, of course, has now been busted, so that's fine now. If we end up rolling over and going down to that pendulum swing, right? No, it's not. It's not a 1, 2, 3 reversal, right? No, it's not a big breakdown into a 2-try trap, right? That's not what I'm talking about. It's holding at this pendulum swing. The amount of the move above the range is then projected to the amount of the move below the range, right? What goes up comes down, and oftentimes it will swing in the other direction. So I've got some support down here. If the market takes off but stalls here, how do I buy this now? Location is great, but momentum is not. One of the things I talked about last night on this newsletter was how I'm always encouraging my clients. I'm trying to help my clients break bad habits in our trade room, right? My goal in our trade room is to show our clients, our members, how to execute properly, how to stay consistent with their results, right? Get some consistency in their returns and break those bad habits. So I always ask them, is it location or momentum, right? Because when you've got location and momentum, you've got a good setup, right? So for example, location here is perfect, right? It's a bull market, trading range, at support, below the range. That's a great location. So location, absolutely, but momentum is a problem now. So because of that, I have to make sure I respect the momentum, right? I want to be a buyer at support below the range, but because we're so bearish, I have to wait for the bears now to try a couple times, right? Try once, try twice, and then I can buy this thing going higher with what we call a nested failure pattern, right? It's not just your typical failure pattern, right? If I went up into a trading range, bull market, up into a trading range, I find my support level below, right? I run lower, I see bears try to get short, and I can buy into their stop loss. Very simple failure pattern. We teach this pattern in our free trading course. There's a very big difference, though, if I go up and then come down, right? Yeah, now I'm at that support level now, but all of that momentum says, careful, because when we get that strong of a move, there's a good chance they're going to come through and bulldoze this thing running lower. Okay, so what I want to do is give those bears the benefit of the doubt. Let them try twice, and then I can be a buyer going back up into that trading range. I think that makes sense, right? If it does, hit that thumbs up button for me. If it doesn't, let me know in the comments section, and I'll make sure to circle back on that tomorrow night, and I'll go into a deeper dive into how momentum plays into the skills you need for timing the entry. Right? If you want better entry timing, you have to respect momentum. It's the most important part of timing your entry. If you want to use a small stop and you want to time your entries properly, right? Get in at the right time, not getting in too early or getting in too late. You have to understand how to use momentum and how to use price action setups like I'm teaching you right now. So again, if we do roll over, but we don't collapse, we don't hold and keep going. Let those bears try once, let them try twice. And then once those sellers, once they've got that rope wrapped around their neck, then we can start looking for, right, that chance to be a buyer. It honestly will look a lot like this, right? Except to be down here. We pull back, bears try once, bears try twice, and whoop, right back up. I wouldn't want to do that in the middle of the range, right? I would do it, of course, down here. So now we have a good idea, though, how to trade it going up, how to trade it going down. Again, I think the only thing that's kind of the variable right now is, do we start to kind of flesh out this larger trading range? If that is the case, not much changes. We're buying at support levels below the range. We're trading breakouts or reversals right off the high. And of course, we've covered all those details already. So now we're ready for Wednesday's session on oil. Remember, we got 10:30 news tomorrow, right, with the oil report tomorrow. So careful after 10:15. If you're trading oil tomorrow with us in the trade room. Last but not least here, how about some gold? Let's do this. Finishing up tonight on the yellow metal. What's the key takeaway on the gold? And again, we talked about this earlier, right? Markets acting the way they should have today with that barrage of good earnings beats, right? Lots of earnings reports beating their numbers. COVID numbers are coming down. Now, the one variable we have this week for gold is stimulus, right? The don't call it a bailout stimulus COVID package, right? It's not a bailout, it's a stimulus package. Whatever they're calling it these days on Capitol Hill, they want to inject the market with a lot more easy money, right? Lower credit standards, make it easy to borrow money. And they're talking about, literally sending out paychecks to stimulate the economy, right? Get tax revenue coming in. So if they announce more updates tomorrow or at some point this week on this stimulus package, what does that do for the price of gold? Well, remember, a stimulus package means more dollars, more euros, more yen, more fiat currency, more paper currency. The more currency in the market means the less valuable each individual bill is, right? The more supply, the less valuable each individual piece of that supply becomes, right? It's the negative correlation, right? That happens with supply and demand. If they pump the market full of easy money, right? Those dollars go down. Gold, of course, by nature now goes up. Right? Gold is a protectionary market, right? It's an inflation hedge. Most of us probably know this about gold, right? Gold is a shelter market. When people are worried about their dollars being less valuable, they buy gold because, they're not making any more gold, so to speak, right? They can print more money, but they can't print more gold bars. Bottom line is that is a very bullish kind of cloud hanging out there this week for gold futures. We're very bearish right now. That's pretty clear. Okay, I don't think you need me to tell you that we're bearish. We are bearish into a trading range, right? Two big legs down into a range. We really are sitting, if you recall earlier this month, we're sitting right on this major low at 32.5, right? There's this big range overhead too, right? This big range overhead. So it wouldn't surprise me, since of course ranges, they act like magnets, right? So it wouldn't surprise me if we did see a reversal for tomorrow. So we'll definitely be keeping an eye on that here tonight on this video. If the bears keep this party going, look at all that big open space they have down there to get down to that 1804, right? So if we can get a breakdown, that's the next level going lower. If the buyers take this back together, right, if the buyers hold this, we'll likely go back into that trading range, 1866 and change up there. All right, so be aware of those big turning points here. Now, we know we're bearish. We know we're in a trading range here, whether you want to call it a triangle or you want to call it a rectangle, right? This range will act as a magnet until we get what? Until we get a breakout. Now, what's my job in a bear market that goes sideways? Find levels of resistance overhead and look for what? Look for failure patterns and use that range as a magnet. This is why I love range-bound markets so much. The plan is really cut and dry. The hardest part is simply not being convinced or fooled by the breakout. Because most of the time, breakouts happen, they look so convincing, don't they? But I want to wait for those buyers to come in, try to buy that pullback, I used to buy those pullbacks all the time when I was a rookie, and it drove me nuts. It wasn't until I began to trade against what I would do normally that I finally started to get that consistency back in my trading. So one of those kind of bad habits we have as traders, which again, my job in the trade room tomorrow morning is to help our members break those bad habits, is to avoid getting fooled by those breakouts. Now, look left. 1845 back here, that's going to be an area of resistance. This is the weekend gap, right? What's the weekend gap? It's the closing price from last Friday. That's going to be a magnet. So there's a couple things you want to think about, and that is, how far is this pullback going to be? For example, if I see a relatively mild pullback, we pull back, as high as 45.4, I can be pretty aggressive. I can look for the buyers to come in, try to buy that pullback. I can sell into stops. I can sell the pullback as it pops before it drops, right? So we got that buyer failure. We've got that bear pullback as we go lower, right? So kind of a modest pullback there into a buyer failure, into a bear pullback combination. But what if we did really pop, right? We take out that weekend gap, which could easily happen. What happens there? Again, remember, ask yourself, do these fit? Location and momentum, right? Well, first of all, great location, right? You're at resistance, above a range, but location's good, but how about momentum? Does that look like something I should be walking in front of? Yeah, probably not, right? Momentum's not that great. So if I do want to sell this thing, the location's great, but I have to respect that momentum. How do we do that? We let the buyers, we let the buyers dig their own grave, right? We let the buyers try once, try twice, and once they have those second tries in, now you've got all of their stops sitting right below that low. You can look for traps above that high. There's so many ways you can enter this trade. You can draw a trend line off of that low, up around that. I mean, there's so many ways you can short this thing. You just got to wait for those two tries. Right? So as we go up, wait for those buyers trying once, wait for them now trying twice. You've got them right where you want them. That range acts as a magnet. Their stops are a sit and duck right below. Again, do we get the best one, right? That trap. Okay? That's by far the best entry. Or does it just kind of roll over into our hidden channel? That's a great spot to short it, right? Or does it do one of these where it kind of pops, right? It pops and rolls over, and we're just simply shorting into those stop losses. So a bunch of different ways to get short on this. But again, if it really pops, again, it's not popping and holding the pullback for a reversal. It's just popping up, right? Not holding the pullback there. Now, as you can imagine, if it does pop and hold that pullback, that is exactly what a 1, 2, 3 reversal looks like. Right? That's a 1, 2, 3 breakout. It's a 1, 2, 3. Remember, it doesn't matter. Well, it does, but not for reversal. It doesn't. Right? The strength of the move higher is not nearly as important as the jump off the moving average. Right? That strong move higher, I will still fade that move back down again. Right? I'll still look to sell it. But if they hold that pullback and they jump, now these bulls have ripped this ball out of the hands of the bears, and now it's on. Now we mark up that high, we mark up that low, and again, think about that deep pullback, that seller failure into bullish combination, into a trap, right? These are very common sequences you see after a reversal. It's a seller failure pattern, it's a pullback pattern into a trap pattern towards the end of that move. 1, 2, 3 setups. Sometimes we see all of them. Sometimes we see 1 or 2 of them. It all depends on how the market sets up as we're going. And again, right, if we just see this thing go straight up, right, it just goes straight up and pulls back with that shallow pullback, that higher high. There's always this point of no return where the market breaks up and it keeps going and keeps going. You're like, okay, well, obviously this is not a bear market any longer, right? But then you get that shallow pullback and that higher high, and buyers are waiting there to buy that trap. So we've got a really good plan as this market goes higher to short that pop or to flip it around and trade the breakout. Now, as the market goes lower, what are my options going lower here? Can I buy this thing? Definitely can. Definitely can, especially with a crown reversal. 1 try for the bears, 2 try for the bears, trap low. No problem with that at all. I got my range as a magnet. We've completed the measured move. It's a major turning point at a major low down here. Remember, there are going to be times where reversals are great, times where reversals are not so great, right? So I can look for these crown reversal patterns. Again, you'll learn these in our video classes. I cover most of them in the free trading course linked up overhead. If we make that run going lower and the bears can hold that pullback and jump, right? That's the key. It's not the first leg. It's that jump off the moving average key. Mark that low, mark that high. And as always, first test is the best test. And, obviously the wide open space down below us, we'll see if they can get this thing to punch down to that 18 and change down there. I would love to see that move going lower tomorrow. But honestly, like every other trader on the planet, I don't care what direction we go in, right? I don't care where it is. I just want good quality setups tomorrow to help all of our members tomorrow get that consistency back in their trading, break those bad habits. Don't forget to come out and join me tomorrow morning. If you're making too many mental mistakes, if you haven't got consistent yet in your trading, our trade room is by far the best place to be. I'd love to have you there, looking over my shoulder, doing it right there with me tomorrow. Grab the link. I'll put a link to get registered for tomorrow morning's trade room every day in the trade room, 8 o'clock Eastern time. I'll put that link in the description of this YouTube video. If you're on the blog right now, I'll put a big button for you below this video tonight on the trading blog. So grab that button. Don't be afraid to call the office. I'm always here to help answer questions. I've got live chat on the left, live chat on the right. You can always drop questions in the comment section as well. And I'm always here to help out. All right, guys? I hope by now you subscribe to our YouTube channel. I hope I've earned a like button here tonight. So hit that like button if you guys enjoyed the video tonight. And make sure you come back and see us again next time. Hopefully I'll see you tomorrow morning, 8 o'clock Eastern time in the advanced course trade room. If not, we'll come back and do it tomorrow night for the next edition of our nightly newsletter. My name is Joseph. As always, be well out there. Be nice to each other, will ya? Stay healthy, and we'll see you guys tomorrow. Adios, amigos. Bye-bye for now.